Indian economy is entering a cyclical slowdown currently. The structural drivers of global companies looking to realign supply chain, shift manufacturing to India, and also the industrial build-up of India remain relevant themes in the longer run. However, currently, a pause in government projects due to elections, compounded with effects of weak job growth in the services sector and central bank tightening, have all combined to have a noticeable impact on recent consumption trends and corporate commentary on demand.
If you break down Malaysia's GDP components by expenditure, consumption remains the main key economic driver for Malaysia. Consumption, which accounts for around 55 to 60% of GDP, includes household spending on goods and services, and by extension, services would include tourism, retail, and finance. Another important driver is investment, which accounts for roughly 25 to 30% of GDP, and this includes both private and public investment in infrastructure and capital goods, and also foreign direct investments. Government spending, which are expenditures by the government on public services, infrastructure, and social programs, also play a vital role in the economy. Lastly, exports, with Malaysia being a key exporter of electronics, palm oil, and natural resources, especially oil and gas, is an important economic driver. For Indonesia is the fourth most populous country in the world, with a population of more than 270 million and favorable demographics, with a growing middle class. Its GDP per capita of $5,000 has the potential headroom to double as it strives to transform into a middle-income country. The country has been engaging in value-up initiatives such as mineral downstreaming in important commodities like copper and nickel to improve its GDP, current account, and currency stability, while large-scale infrastructure investment under the Jokowi administration has laid the foundation for monetization under the Prabowo administration. Looking ahead, improvements in agriculture and farm efficiency, which comprise about 13% of the economy, and the government's push towards improvements in social infrastructure, such as housing and nutrition, are key initiatives towards broadening the base for sustained economic growth. In Thailand, the key economic drivers are tourism, government spending, and potentially an improvement in domestic consumption from the secondary effect of government spending. Exports, while in positive territory, is not contributing as it should because Thailand has been in a trade deficit year to date and is not expected to turn into a surplus for the full year.
The India market is weak through October as high starting valuations, increasing occurrence of earnings miss, and China emergence as an alternative EM investment market have all converged into concerns whether India's past 3 years rally can continue.
For Malaysia has done relatively well amidst the volatility we have encountered so far this year, as Malaysia is one of the better performing markets within the ASEAN region. One of the main contributing factors is the stability of the current government compared to the different government changes we've witnessed in Malaysia in the last 6 to 7 years. Government stability is important as it allows the government to carry out policies to drive the economy, like the Madani Economy Framework, which the Prime Minister Anwar Ibrahim launched in July 2023. Themed Empowering the People, the Madani Framework aspires to make Malaysia a leading Asian economy and to improve the country's global standing in economic size, competitiveness, human development, and corruption perception. The biggest impact from the recent US presidential elections will likely be from the trade and tariffs initiatives that the new President Trump may implement. Nevertheless, Malaysia, with its strategic location, established manufacturing base, skilled workforce, and government incentives, should benefit from the global supply chain relocation caused partly by global trade tensions. For Indonesia, the Indonesian market has been a laggard in ASEAN in 2024, mainly due to political uncertainty over the Indonesian elections, as well as muted commodity prices compared with 2023. Looking ahead, we expect the more stable, inclusive, political environment under the new probable administration to be conducive for businesses and economic growth, while fundamental improvements in the commodity cycle can create a more resilient rupiah that can attract foreign investors back into Indonesia. For Thailand, the market was weak earlier this year on concerns about the stability of Thailand's governing coalition prior to and following the dismissal of the Prime Minister Srettha Thavisin. However, the appointment of the new Prime Minister Paetongtarn Shinawatra and the formation of the new cabinet was much smoother and swifter than market expectations. This led to a strong rebound in the Thai market following the earlier sharp correction and an optimism that the expansionary economic policies that was initiated by the ex-PM Srettha will be continued. The US presidential election may cause near-term volatility in the market as investors may be apprehensive of the economic policies and geopolitical direction of the new administration under Trump.